Good afternoon, you beautiful people. You welcome back to Young Money Investing. My name is Liam, and this is my weekly technical analysis where I go over some of the major US stock markets to help you establish some trend and some market structure so that you can make better, more well-informed trading decisions and hopefully make more money. Now, if you appreciate what I'm doing here, go down, smash that subscribe button, hit that like button, and let's jump into the charts. All right, now we're starting off on a daily time frame, looking at the DXY. As you can see, last week kind of got smacked back down, fell right into this support level at about 101.62, and then caught a nice little bounce off of it. Still below all of our moving averages, so we are going to see some type of interaction with the 50-day moving average this week, and possibly the 20-day moving average as well. Now, I would like to see price action break through both of these if it was going to continue higher. Of course, I could very easily see it coming back down, but of course, we'll have to wait and see what happens, what the Fed's going to do, what the dollar wants to do as a currency. Let's jump into our first index. We are going to start off looking at the Russell 2000. Now, the Russell had a pretty nasty sell-off about 2 weeks ago. You can see just a little bit of consolidation right about here. But what I like to see, and what is kind of giving me a bullish thesis on this, is if you take a look down here at my RSI indicator, you will see that we have bullish divergence, meaning that as price action is coming down to these low areas here and here, RSI, or the strength behind the move, is moving in an upwards trajectory, meaning we have more and more buyers stepping in. So typically when this happens, you do see price action follow the momentum indicator, the RSI, and you see a large move upwards in a direction like this. Now, full disclosure, I do have a position open on the Russell 2000 currently for that exact reason. My target is going to be about $180, or about $18.80 if you're trading futures. That is above pretty much all three of our moving averages, but with the RSI divergence coming in and this big move, I think we do need to see some type of gap fill coming in addition to the RSI divergence. And so that's pretty much the thesis here. So at least in the short to medium term, I would expect to see more upside on the Russell. Now, let's jump over to the NASDAQ. NASDAQ, as you can see, we'll clean up some of these lines. You can go. NASDAQ had a very nice breakout out of this downward sloping channel, kind of a consolidation channel following this move back in early January. You can see nice up, down, and then it seems to be we are moving back up. I would like to see, I guess, some type of little retest of this consolidation channel right about here. Perhaps we come back down to about 12,175, 12,180, somewhere in that vicinity. We could see that acting confluence with the 200 moving average, which, as you can see, has been support here, here, and here. So that's what I'd like to see. Price action might ignore whatever it is that I want and just keep moving up higher and higher and higher. But the RSI is kind of playing with overbought area. And so at that point, usually you will see some type of retracement. So perhaps this week, perhaps next week, perhaps not at all. I really couldn't tell you. But just kind of be careful if you're opening up longs on the NASDAQ, knowing that we are a little bit extended. The RSI is kind of playing around with overbought areas, and there might be some type of retracement back down to that 175, 180 level. Let's jump over to the Dow Jones. The Dow Jones fell out of this consolidation zone about 2 weeks ago, and pretty much just all consolidation last week. You can see we came down, pretty much just sideways movement, got slapped back off of our 20-day moving average, which is this purple line, and then a little doji candle and a nice green candle to end the week. Where price action is going from here, I couldn't tell you. Your guess is as good as mine. You might continue further and get a better retest of this trend line, which we have previously broken out of back here in November. Or price action could take a leg back up into this consolidation zone and potentially even retest this resistance level above it. I don't think you'll see that week. That would be a pretty sweet move. Would take you for about 6.5% over the course of the week. That would be a very, very good week for the Dow. Now, it is time for my trade of the week. I got something a little bit special for you guys. This week, we are looking at Marathon Digital Holdings. The ticker symbol is M-A-R-A, Mara. Let's go ahead and draw some lines, and I'll show you exactly what I'm looking at. Okay, as you can see, I have several lines drawn out right here. First of all, we have this blue line, this kind of hooking shape. I always like to see when price action has kind of this nice rounded top or rounded bottom. This is a very nice rounded bottom. Tells me that price action has very kind of slowly and consistently changed sentiment, and it wasn't sharp up and down movements, peaks and troughs and peaks and troughs. Usually when you get some kind of movement like this, it takes longer for the trend to reverse, but it is a more solid reversal. So first of all, we have that. That tells us that the trend has kind of changed from a downtrend to an uptrend. Second of all, I've drawn out some Fibonacci lines here. You can see we took this move up. The high was $9.57. And we retrace down to our 0.618 level. That is in the golden zone. The golden zone is generally 0.38 to 0.618. Personally, I look for at least 0.5 retracements. This is a 0.618. It's perfect. And then we have this move back up to the 200-day moving average, where we have some sideways consolidation happening right now. So what I would like to see from price action this week, very simply, is to get a close above the 200-day moving average. That will tell me that this trend is continuing. We are still moving in an uptrend, and this is somewhat slightly of a cup and handle pattern. For all you pattern traders out there, it's not perfect. It's a little ugly. It's a little messy, but if you close your eyes and squint a little bit, you can kind of see what I'm talking about. So cup and handles generally precede very, very large movements up. And we also have the 20 and the 50-day moving average below price action as well. So we're looking for a close above the 200-day moving average. Let's say you enter the trade at about $9.60. We're going to target this previous high back over here in October at about $15. And then the stop loss is going to be probably right below price action where it is right now, which would give you about 2.5 reward to risk ratio. So 2.5 reward to risk, not bad. I think if this trade does play out, it will play out over the course of maybe about 2 to 3 weeks. Of course, depending on what the overall market structure does and what Mr. Jerome Powell decides to do with interest rates moving forward, could impact this in any manner of unforeseeable ways. So please do your own due diligence. Don't just follow my advice. This is not financial advice. This is just my take on the market and what I happen to see. So don't be stupid with your money. I appreciate each and every single one of you guys. Thank you so much for watching, and I will see you all next week. Peace out, homies.